this on my computer, so and then I'll upload it as a private link in case you want to see it further, like, well, in the future also. But anyways,
Okay.
I'm going to show you because you think you I see you think you cannot. Oh well, you don't believe in yourself that you could actually do this.
Yeah, no, not an ounce of belief.
I'm telling you, you can, and I'll show you right now. Let me just remove.
Okay.
I'm sure right now you're just seeing. I'm gonna explain everything word for word so that you understand everything, even the terms and everything, right? So I'm gonna start with this, for example. This is a 4-hour chart. When I'm saying it's a 4-hour chart, I mean that each bar. Let me zoom in. These are called candlesticks. You see,
Mm.
they are called candlesticks, right? So it means that each
Wait
candlestick,
now, just
yeah,
Sviso,
yebo.
what screen are we looking at?
Oh, I
Are
think we're
we
looking
looking
at the
at
wrong screen.
Blackstone?
Okay, I think we're looking at the wrong screen. Sorry, man.
Okay, where do I need to be?
Okay, let me change the screen. I'm gonna change it. Can you see something?
Okay. Yeah, I see. Yeah, a
Okay,
graph.
sorry, man. So these are called candlesticks. Those are
Okay,
just called
which ones are candlesticks? These.
everything.
Yeah.
Yeah,
Okay,
everything
I
that you
see.
see here are called candlesticks. They look like a candlestick. Anyway,
Yep,
they
I
look like
can see
candles.
that.
Yeah, so they are called
Mm.
candlesticks. That's one way of reading the price. I mean, the of reading the price. The price is on the right, right? And then
Mm-hmm.
down here is basically the date. And then on the side here is the price, right? So
Mm-hmm.
now I'm on a 4-hour chart. I'm on a
Mm-hmm.
4-hour chart. What does 4-hour chart mean? It means that it took 4 hours for this whole candlestick to finish. And then it moved
Okay.
candlesticks. That's another 4 hours, another 4 hours, another 4 hours, another 4 hours. So if I were to come here, let me just make this so that you can see. The price is still moving, it's not finished. So this candlestick will finish at 3 o'clock. Once it finishes at 3 o'clock, and then it's gonna move on to the next candlestick. That's what basically
Okay.
start a new candlestick. So what this tells us is the price went all the way up and then failed to go above, and then the price is going down,
Uh-huh.
right?
Okay.
Okay, so when you speak of candlesticks, if the candle is going down, for in this okay, well, you can customize your candlesticks. So my candlesticks, if the candlestick is going down, it means that the price is. I mean, if the price is going down, it means that
Mm-hmm.
it's black. So the price was going down, so it went black.
Okay.
And as soon as the
Okay.
price went up, it went white, right?
Okay.
So now you need to understand the opening and the closing of a candlestick.
Mm-hmm.
Okay, so let's just say, for example, so let's look at this candlestick. This candlestick, the
Mm-hmm.
price opened here at the bottom, and then it went a bit down, and then went all the way up. You see these tails that you see? It's just
Yeah.
illustrating where the price went, and it closed above here at this specific price. So what happened was
Okay.
the price opened here, and then it moved down a bit, went all the way
Uh-huh.
up, and then
Uh-huh.
closed just below there. Then it closed here. And
Okay.
then when it closed here, it started at once that 4 hour was finished, the price
Mm-hmm.
opened again, right? And then it did the same thing, went down a bit, and then it went all the way up and then closed again here. Same thing,
Okay.
went up, yeah. And when it closed here, because it was going up, it's white. So when it was closed here, it's closed here, and then it started a new candle here. The new candle that started here, opened here, and then it's closed right here at the bottom because it's black. So it's closed here, and then it
Mm-hmm.
opened again, closed there, opened, closed again. Then it opened here, went down a bit, and then it's closed again here. So do you understand that?
Yeah.
So that basically took 4 hours. Each candle represents 4 hours. So
Okay.
now This, if I were to change this now, let me show you a daily chart. This is a 4-hour chart.
What? Okay.
So if I go to a daily chart, that means that each candle now represents a day. You get me, Teniel?
Yeah, I'm seeing that.
So now this took the whole day for this candle to close. The whole day for this candle to close. Can you see now it's still the same chart out CHF, but can you see now the difference is it looks
Yeah.
a bit smaller because now what has happened here in this whole candle here, in this black candle that you see is what's happening today. It hasn't closed, not 12 o'clock yet. But if I were to go to a
Okay.
1-hour chart, if I were to go to a 1-hour time frame, this is what has happened. This is what has transpired today. So today is the 10th, right? So from here, this is what has happened today from there until here. But if you go on a daily chart, it's 1 bar.
Yeah.
Okay, so each bar represent for now it represents 1 hour. But what I do is I actually execute my trades on the 4-hour chart. Okay. So now before we go there, I just want to show you something. Basically trading is about buying and selling. Okay. So if the price is going up and then you predict that the price will actually come down, so that means
how did you predict that, or
I did okay, well, that's what you need to learn. It's strategies, right?
okay.
So let's just say now we predict that okay, the price is gonna come down here. Price is gonna come down here and I'm going to sell. This is where I want to sell. Okay. So if you predict that the price is gonna come down, you have to sell. If you predict that the price is gonna go up, you have to buy. Okay.
Okay.
Can you see these lines? These many lines that are drawn like red, blue, across.
Just wait. I've lost that screen.
Sorry, can you see now?
Wait. I saw it there, and now it's gone.
Okay, let me try again.
There it is. Okay.
Okay, something happened. Okay, so now, can you see these lines? Those lines are called supports and resistances. Okay, so if the price is going up, let me just go right at the back because that's just gonna confuse you. Just gonna go here. So let's just say the price is going up. It might find a resistance. Once it finds that resistance, it's gonna push it to go down. So this was a resistance. So if a price went up, the price was going up, it found resistance here. Then it went down. And then the price here, it went down and then it found support. And then it pushed it up. So support pushes it up. Resistance is when it actually pushes it down. The likely area, sort of like key levels where the price is likely to turn the markets, to reverse the markets, right? So okay, so now the price went down, find support, found support here, it went up, found resistance here, and then it went down all the way down, found support, resistance, and so forth. If I were to
go now wait before you continue.
Yep.
Or will all your support lines be red, or is that just
that is a reason? There's a reason why my support. No, they're not red.
Okay.
These lines, I put different colors because I got the support and resistances from different time frames. I'll show you now how I got the red.
Oh, okay. Okay.
For me, the red means I got it from the daily chart. The blue means I got it from the weekly. The purple means I got it from the monthly chart. So for me, I know why I've colored them.
Okay.
Yeah. So but don't rush there. I'm just explaining all the the easy stuff. I see you getting it fast. But anyways, what I did was I'm gonna show. I've entered 2 trades already today, and I'm gonna show you. I'm gonna show you on my live account. So here I sold here. This is where I sold, and I'm currently in profit on this pay out CHF. I sold here, and on the on out JPY, I also sold on out JPY. I'm not sure whether I'm in profit or not. Yes, I sold on out JPY, and I sold here on out JPY, and I'm currently also in profit. So I'm in profit in 2 trades. So I was trading 2 different accounts. Let me just show you on my 2 accounts. Let me just come here. I'm gonna change the screen right now. I'm gonna show you this one. I'm not sure which one is it. Okay, so this is the wrong one. Okay, let me just check, but still, nonetheless, I'm still in profit. Yeah, this is the one I wanted to show you, the out CHF one that I've shown you now. It's something that I've sold this morning, so it's still relatively new. So let me just open a new chart. Okay, so I use this software to execute trades. This is only for execution of trades, right? But don't worry about that. I'll take you through that. New order chart window. So can you see I've shown you where I've sold. Okay, move. Okay, the chart looks a bit different. I'm gonna change that into a candlestick. So this is where I sold. Can you see? So it says here sell. So I predicted that the thing is gonna come down, so I sold here. This is
Oh,
only.
wait 1 second, wait. I lost my screen. Okay, I'm back.
Okay, so this is where I sold. Remember, I showed previously that out CHF I've sold. I
Yes.
sold right about there, right? This is where I've sold. So I sold here, and I'm expecting this thing to come down all the way to. Okay, wait. It's a bit. I'm expecting to collect my profits down there on the red one. Let me remove the grid so that you can see.
Okay.
So I'm expecting to close my profit there. I've sold there, and I want to close my profit there. If I put here on the profit, if I close the profit, my profit will be roughly it says here my profit will be $900. That's what I'm expecting. I'm expecting $900 for this just one trade here. Right? So
Okay.
currently I'm in profit. Can you see it's moving? But I'm in profit with $13. I've just entered this trade, right?
Okay.
But this is where I'm expecting to close. The system is gonna close itself. It's just gonna close it. As soon as it hits this price, it's gonna collect the profit. You don't need to be on the computer 24/7. It's gonna do that for you. Okay. So if you look here, yeah, you don't need to be. You set everything. It just does everything for you. If you look here, there's a balance. This is my balance currently on this account. It's $77,000, and then this is my equity. This is what's currently is happening here. This is my equity, and that is my trading balance before I executed a trade. So that's what it means basically.
Okay.
Yeah, this is just one of my accounts, and I also have another one where I executed another trade there. I'm gonna show you right now. Okay, this is another account I'm gonna show you right now. Resume share, new share. This is the one now. Remember about that one that I told you about the out JPY. I showed you two trades. I showed you 2 trades. I said I'm in.
Yes.
But on different accounts. I just want to show you that this thing is real. I'm not messing around with you. A lot of scams and all of that stuff. So yes, I'm in trade. I sold here. It even says here sell. So let me remove this. It says here sell. It says here sell. This is how much I sold here. And from this trade alone, I'm still gonna be entering a lot of trades today. But from this trade alone, I'm gonna change this into a daily chart so that I can see it clearly where I'm expecting to close. So if I close this, I'm expecting $1,500 just from this trade alone. So if you're looking at here, we've got a balance, same thing. I've got my balance here. This one is a little bit higher than the other one, and then there's an yeah. So this is how it looks like when you enter. And basically how you enter trades, let's just say you want, for example, USD ZAR, which is our main currency. You go to a chart window, but I do not recommend trading USDs up because it's not stable. So, okay, so let me change that. I'm just gonna show you a few things today. So let's just say you want to enter a trade. It's not even, I'm just gonna show you basic things. So if, let's just say you want to enter, go to trading, and then you go to new order, and then you choose whether you're buying, sell, or buy, and then you put your lot size.
Okay.
That I need to show you how to do and all of that. Then you place your sell, and then so it's easy as that. Or you can automate it and say if it reaches this specific price, it must enter automatically. Like I said again, you don't have to be on the computer all day.
Okay.
Yeah. So now let's go back to the trading software. Okay. So now if you look at that out JPY, I sold here. Why did I sell here? Because I saw the resistance. So I sold and I'm currently in profit. But now you need to you don't just sell anywhere you wish to sell, you buy whatever you need to buy. Because sometimes I might have sold here and then the price goes against me. That's a negative, that's a loss. But now you need to know the specific timing for the where you want to sell or buy. Okay, but that also comes with strategies that I've got here 4 strategies. I've got the technical analysis that I've just shown you now. I've got the Fibonacci. This is Fibonacci. Don't worry about it. It might confuse you. And the reason why I sold again is because it was hitting this line here. So I'm expecting it to come down. If you look at the price reacts to this line. The price moves here, bounces, moves again here, and then it's a resistance, it's a support, a resistance. So I use different strategies to actually come up with different, to actually make my point firm. In this, we call it a confluence, getting different confirmations. That is called a confluence. So here again, this is another strategy I use the most. It's called Elliott wave. So on Elliott wave theory, I'm also expecting this to come down because I've drawn my supports and resistances, and I drew this one before the market even got there. And look what's happening. The market got there, now it's starting to come back. I also drew this one before the market got there. The market hit there, and then it started going up. So I'm actually, and then there's these trend lines, but I'm not gonna get to that. And then there's also the institutional model that I use. So what is the institutional model? Basically, the institutional model is the model that the banks use. So whenever we trade against the banks. So you want to be on the side of the banks.
Okay.
Yeah, so this is the institutional model. If you're looking at it, I'm gonna show you. If you look at the arrows, Okay, sorry about that. This one is a bit confusing. Okay, there we go. If you look at the arrows, I did this analysis last week, not last week, 2 weeks ago. So I drew an arrow like that and said I was expecting the price to come up first and then come down. And look what happened. The price came up, then it went down. Can you see? And if you're looking at where is the price sitting now, it's sitting exactly here in this area that I think might actually push this thing up. If you're looking at the arrow again, sorry, it's just put it back here. Let me remove this. These arrows were drawn before, so I was expecting the market to move from here to there, but it did not. It first went down first, but eventually it went up. If you look at another pair, this I'm talking about, I was expecting the price to move from there all the way up there, and it did that. This is another pair again, out JPY. I was expecting the market either to move here all the way there or first break this. You see, I've drawn this in this brown rectangle, so the price went down, hit the brown rectangle, starting to go up, exactly as this arrow here. So I did 2 arrows because I wasn't sure. I was thinking maybe first it's gonna first hit there and then come up, and then it did that exactly. And this is another one. You will see there will be others where I got them wrong, but the majority of them I got them right. So here another one. I said it was gonna come here. Looks like it went all the way up, and I even wrote here clean highs. Price will move this way to take out all the stop losses. This you will understand if you decide to take the course. And then if you go to Euro USD, now this is the one that I did not get right, but did I enter? No, I did not enter it. But I first said it was going to come down here and then go up. It's just continued going down. So out USD, I sent this out to the group. I even said this is the setup of the week, and I was expecting the price to come down first, and it did come down first in this area, and now it's starting to go up. So I can, funny enough, they are relatively accurate, you know, but this is just one method out of the 4 methods. Okay, so now we're just gonna do a chart together. Let's do. I'm gonna show you. Since I've explained the support and the resistance, I will show you how to draw the support and the resistance. There's also a video on the support and the resistance, but you'll actually do this. It's very, very easy because in my course, I've got people that has never traded before. I've got lawyers, I told you about that, but now they're actually doing well. So now let's go to NZD-USD. I want a clean chart. NZD-CHF. Okay, so this is clean enough. Now I'm gonna do the support and resistance, and then I want to show you if the price actually played along those key levels. So this is what I do. Okay, so this is very, very easy, but most people are doing it incorrectly. It's very, very easy. Most people are doing it incorrectly. Yeah, so what I do is I first look at the range. So this is on the monthly. Can you see I've changed it to a monthly time frame now?
Yeah, yeah.
So you start from the monthly time frame until to the 4-hour time frame. The reason why you start from the monthly time frame is because the price is likely to go on the higher time frame. It follows the higher time frame than the smaller time frame, because the banks do not trade on a daily basis like intraday traders. The intraday traders, when I say intraday traders, I mean those people who sit in front of the computer all day. Those people are trading the 15-minute chart. They're trading the 1-hour chart. No, the banks do not do that. The banks are trading the daily charts, the 4-hour charts, and they look long term, not like what's going to happen today. Bona, they are actually facing the long-term price. So why should you look at the 15-minute chart? If you're trading the 15-minute chart or the 5-minute chart, you are basically gambling. That's what you're doing.
Yeah.
You just want quick money for today. I'm gonna make money. Let me do this. No, rather do it the right way and follow what the banks are doing. So this is actually the monthly chart. This is where I'm trying. This is where I start. So what I look at the highest and the lowest point, the recent high and the lowest point, right? So my recent low is here. My extreme high is there. Do you agree? My recent one.
Yeah.
Because here, I don't know, anything can still happen on this monthly bar. It hasn't closed. It can just decide to come down. I don't know. So I cannot say this is the lowest point.
Okay.
So this is my highest and this is my lowest. So what I'll do is, once I get that, I will draw a line. We're just gonna add a guide. I'll draw a line. Let me make this black. Save default. Okay, so I'll draw a line like that on my recent high, and then let me duplicate. Then I'll draw another line on my recent low. Okay, so once I've done that, I'll just label this monthly RS, meaning monthly either resistance or support. Okay, yeah, I'll show you why. I'll tell you now. I'll explain later. Then this one as well, I'll label it okay. So once I've done that, now this is the part where you think this is the easiest part now, but it's so accurate. So what I do is I'm going to take this, the distance from here to here, I'm going to divide it into 50%. So I know there is also a tool here to do that. So if I were to take this tool and put it like that, if I want the accurate measurement, I use this tool, and then it's basically Fibonacci. I don't want you to confuse you a lot. I just want to show you you just divide that into 50%. So this is 50%, right? Okay, wait. I'm trying to, yeah. So from there, once you've done that, you also divide the distance from there to there by 50.
Okay.
Can you see how easy it is? Let me first change this.
Yeah.
It's very easy, but you need to practice, that's all. Then you divide this into 50. Still a monthly chart. So if I take this distance from there to there, and then I divide this in, you can even try it. I'll give you an online software where you can practice.
Yeah, you must send all those links you sent before because my phone crashed and I'm using a different phone now.
Not a problem. Is that the second one?
No. It's still the first one that was smashed, and yeah, using a backup.
Oh, okay. So now, okay, so you've divided this into 50, right? And then once you've divided your range into 5 parts, 1, 2, 3, 4, 5. Okay, you're done now. Now, once you've completed that, you got your weekly chart. So now this is my weekly chart. If you look at the weekly chart, you need to divide again that weekly chart into 50%. Fibonacci. People do not understand why does it actually work that the price actually goes according to those key levels, but it's basically, it's mathematics. It's called Gann. If you want to, that's all I can tell you. But if you want to do deep research on Gann, you are welcome. But
spell it.
GANN. Yes, I've
Okay.
got Gann tools. Can you see here? Can you see my mouse?
Wait, yeah.
Yeah, on my left, they say
Okay.
So I've got tools for Gann. These are tools for Gann as well. And then actually, this is what I use, Elliott Wave. So now I've put 50, and I need to divide again this, but now it's no longer a monthly resistance. It is now a weekly. So now, whenever the price approaches the monthly resistance, chances are definitely the price will definitely turn there because it is a higher resistance. So it's more the resistance has a higher impact than the daily chart or the 1 hour or the 4-hour chart. Do you get me?
Oh yes, I see.
Yeah. So now we're on the weekly. Weekly is also strong. Is regarded as it's also a strong. Can you see that? If I were to put this 50 here, look what happened. Look what happened. The price bounced exactly here. And if I continue now, and I do this again, duplicate, I put the 50 here, and then I leave it like that. Price again bounced exactly here. Price moved exactly here. Price moved exactly there. Moved exactly there. And remember, I just did this. I showed you. It's not like I cherry picked this. You saw it from the start. So if I move here, duplicate this again, put this somewhere. I think the 50 is somewhere around about here. I'm not going to actually, but I think it's somewhere there. If I go at the back, I'm sure this level held. Okay, well, that's too far. Okay, so I've done that to the weekly. Now you go to the daily. And what do you do on your daily? Do the same thing again. Okay, divide this into half, and then label daily. And then I think this is 50%, it's somewhere here. And then if I were to duplicate this, I take this here, and if you divide this by 50, it comes up to here. And yeah, it looks just about right. The price bounced around about there. If I were to do this again, duplicate this, and I put it here, yep, that's a 50. I'm not gonna do all of them. I just want to show you that the price actually meet these levels, because now I need to do this again, divide this by 2, put a 50, then it's gonna be a daily again. You see that? And then once I'm done with that, I go to the 4-hour chart. Once I hit the 4-hour chart, add guide, 4-hour chart, divide this by 50. Can you see now? Look at that. The price exactly came here and then it's starting to come down. Yep. So all I need to do is now change this and write here 4-hour, right? And then I duplicate, and then I take this, put it here, divided by, yep, somewhere 50%. Price was just ranging here, and then duplicate, put here. Yep. So can you see? So this is where I actually enter. I look at these levels. This is how I enter. I look at these levels, and that's where I enter on these levels here. So I know that let's look at the monthly chart. Okay, daily charts, weekly charts. No, okay, it's not even there. But if you look at the monthly charts, like I said, if the price comes close to a monthly chart, it's bound to reverse to a monthly resistance or a support. So here the price was coming down, and then here it was pushed up to a daily resistance. Then the price came down. When the price does not bounce there on the monthly chart, it means it breaks it. It's called a break. So it broke this support here. It broke it. Every time, sometimes when it breaks it, it normally comes back to retest it. So it went up, down, went up to retest it, and then it came down again. So remember, I said this is a support because we are expecting the price to get support here and then goes up. If it breaks it, it no longer becomes a support, it becomes a resistance. Now the support becomes a resistance because the price has gone through it. Now it's found resistance here. It cannot go beyond this resistant line. Now it went through. You understand? So it changes. So that's why I wrote here resistance and support. Resistance or support, because it's changing. So same thing here. The price broke this support, found another support here, but this support is no longer support, it becomes a resistance. So now the price goes all the way up. It was a resistance for it to continue going up, and then it fell down. You got it.
Yep.
Can you see that? Can you see you could you can actually do it?
Yeah, it's straightforward.
Huh?
It's straightforward.
It's just
Just need a bit of
straightforward.
twist run.
Yes, it's straightforward. It's not complicated. It's just that, like I said, people get the wrong education, and in terms of all of this, and whenever they even because remember, if you are going to draw your support and a resistance incorrectly, it means that you're gonna take the price where you're gonna execute a trade where you're not supposed to execute a trade. For example, here support went up, support again went up, then it broke it, went for the retest, and then it came down, went for another retest. This one became a resistance, went down, then it's another buy here, and so forth.
Yeah, no,
I was just showing you the little bits. Yeah, that I just wanted to show you that it is possible, and it's not. Those people managed to get the whole thing in in a month, not the support and resistance. What they know now is the support and resistance, and also supply and demand. The supply and
Mm.
demand, I haven't. I'm not going to show you now, but it's something that you need to do once you have mastered the support and demand. I'm sorry, the support and resistance. Then you can go to supply and demand, and and yeah, so forth. But I was just letting you know, just even though this one is very. Where was I? Even though the one that I've shown you is is easy, but it's actually it has a high impact on your trading because
Mm.
I use it to enter trades. That's what I use because my entries I like to enter early when everyone uh, is not seeing the market. Rather get it early than when everyone
Or
has.
when they're sleeping.
Sorry.
When they're sleeping.
No, not when they're sleeping. But for example,
No, I understand what you're
uh,
saying.
so what happens is if people see this thing goes up like this, everyone will want to buy. They'll say, "How this thing looks as if
Yes.
it's gonna continue going up." But me, I'm like,
Yeah.
well, I'm doing the opposite. I'm saying, no, this thing is still gonna come down here. Here it's gonna hit maybe this is a
Mm.
level. This is a key level, and then it's gonna come down. So what happens if you start just buying here,
Mm.
and then the price goes the opposite direction, and then it takes you out of the market? And even here,
Yeah.
I would buy here where everyone is still selling because they're following what the market is doing. The market is coming down. Why don't we all sell? So they sell. But me now, I always look at those key levels and say, no, this is about this. I always do the opposite of what the crowd is doing. And
Mm.
that's why they say 95% of people trading lose money and 5% only makes money. It's because of those
Yep.
things, they follow the crowd. By the time they enter, it's
Yep.
too late. So would you rather buy here
Yeah.
or buy there? Obviously, you'd rather buy there early.
Mhm.
Yeah. So
Yeah.
it's not
Yeah.
difficult because even these videos that
No.
it's not difficult at all. The maximum in terms of minutes, the videos that for the course is actually 15 minutes long, and they are like
Mm.
24 videos.
Okay.
So it's
Yeah,
like
just send me all the links again so I can just
just practice, try it on your own.
go on and
Yeah.
mm.
So yeah, I was just showing you this just to give you that oomph that you could actually do it because it's simple.
Yeah, well I need to do something.
You will, and let me tell you, no one can take this away from you. Hey,
Mm.
that's what I like about it.
Yeah. Okay, no. Thanks for that. I
Alrighty,
have to I have to pack up and go get children just now.
not a problem, Tennille. Not a problem at all.
But yeah, don't but please send me all those links that you
Yeah,
sent previously so I can just go register online and all that stuff.
not a problem. And feel free to ask if you don't understand anything.
Okay.
I'll also upload this video and send it to you. Eh?
Okay.
Alrighty, great. Have a great day, Tennille.
Thank you for
I
your
hope you
time.
enjoyed it. Eh?
Yes, no, I did. I'm gonna go and sign up.
Alrighty.
I need to make money at some point. So
Yeah.
yeah.
Yeah, I got you. Not a problem. Let me just stop recording and then I'll send it.